everybody, and welcome to another stock review by Bleeding Crypto. It is Tuesday, April 7th, and we're going to take a look at GE. GE was one of our requests inside of the request channel, the new channel that I put for stocks. So I want to take a look at this. I know GE is a very, has a long-standing American company. You hear GE a lot. More so when I was younger, not so much nowadays, but I know they do quite a thing just besides appliances. If I'm not mistaken, they do build engines they do something for aerospace, if memory serves correctly. However, looking at the chart, I'm wondering if GE may be one of those companies that's going to be phasing out. Maybe they're just not innovating enough, or what the deal is, and let me explain why. We had a low established back in 1975. That's where I got this low of 61 cents. That was the lowest point that I can find. And from 1975, she didn't find a lower low from that point, and just continued to gradually rise and rise and rise. And then pretty much in 1994, she went sideways for almost a year. I'm sorry, exactly a year. And then she went parabolic. I mean, she just went on a tear from 1994 all the way up to 2000. It just went parabolic straight up for 6 years. However, not sure what happened in in 2000, but from that point on, she never recovered. So that's 20 years of not really recovering. So she put the high of 58.15 in 2000, in year 2000, put a low in 1975. So I had a nice 25-year run that yielded 9,432%. I'm only going to use one Fibonacci tool because there's this same one still applies from 1975, as we never broke the high. All we did, if you look and you zoom out, we put in a high, we put in a higher low, excuse me, a lower high, lower low, lower high, and we're back down. And look how interesting this this market structure, this price action played out. We came down, and when she retraced, she stopped at 618 golden ratio. During that time, on the way up, it put in a series of monthly gaps. Now the monthly gaps started right above 65 cents. Here, let me just show you real quick here. Let me pinch this here. 61 cents. So the gap above 61 cents, the first gap was at $1.10, $1.32, $3.05, and it continued to gradually put in those monthly gaps. So on the way down, I want you guys to see something here. On the way down, the very first gap acted as support. If you guys have taken my gap module, you know how it's these gaps follow a certain rhythm in the market, and this is textbook. It almost never fills on the first try. It'll always act as support. It bounced pretty nicely, came up here, put in this lower high, came back down again, acted as support, support, support until she filled. Came back around, resistance, and played with resistance and support on that gap line. However, when she did come down, she did respect 618. She stood there at 618 for 1, 2, 3, 4, 5, 6, 7, 8, 9 months, bounced, and then bounced right into 382 perfectly. Again, the fib levels inside of stocks are so much more accurate than in crypto. They're respected so much more in the stock market, making our job much easier because it allows us to understand the way the price action moves within those fibs. She broke 382, immediately flipped it into support, broke it, immediately flipped it back into resistance, tapped it 3 times, came back down, landed exactly on 0.50, lost it, came back and checked 0.50, lost it again, came back and bounced off 618, failed, came down to 706, came down to 786, up to 706, back down, and look where she bounced. 886 for the win. 886. Put in that wick, bounced, found support above 886, went on another tear. Now it touched 886 from 2000 till 2009. It took 9 years for this to come down. In the meantime, look what it did. Look at the flag pattern. Look at the bear flag. Pole, flag, breakout, pole, flag, breakout. Two bear flags, as you can see here. So in 2009, after 9 years of hitting the high, came into institutional investor zone and took off. Took off and then put put in a lower high from this lower low. No, yeah, excuse me. Started forming another lower high from 2000 March 2009 till July of 2016. So 7 years, 7 years to put in that lower high, and broke down from this flag pattern, just like she broke down here. You know what? Let me do this. I'm gonna measure. How do I get out of my, I want to measure something here. Get my tool here. I want to look at this harmonic pattern. Bear with me. That, let me clone this. Let me see how well she respected this. I got close to it. So the end of the price action was there. The end of the harmonic landed right on the gap. That's pretty crazy. She didn't quite get there. It got close to it. So with that in mind, I want to see something here. So that's that one there. Let me clone this one here. Let me take this to the top. Puts us, okay, puts us in there. All right. I'm looking at this structure and I'm trying to determine, is she going to give it all back and start? She's got two gaps at $1.10 and $1.32, and the beginning is at 61 cents to completely give back 100%. She gave back 886. So let's continue our analysis. She put in that high here, that lower high in 2016, and then just pretty much just collapsed. Again, finding support at 886 for the win. 886, found support 3 months, bounced off of it again, came back down into 886, bounced off of it again, and once again, and then you have this current monthly candle sitting at 886. It looks bearish. Look at the arch on the 9 EMA. It's way below the price action. However, we know that this gap has to close. Here's a perfect example. This one fell really hard, got away from the 9 EMA, and she put in a nice bounce and then got rejection, found resistance, came back down, was able to break above it, and got rejection right at 786, right back down to 886, but we still have this gap to 10 with. So the only gaps that are open, she's filled every single gap since 2000, the past 20 years, except for the following three gaps to the downside: $3.05, $1.32, $1.10. What I don't know is if she does come down, fill in this gap, and gives it all back at 61 cents. What's the fundamental driver that's going to make GE move up again? Is GE pretty much just a lost, ancient, phased out company? Could she not keep up with technology? Is she going to get acquired by someone else? So those are the answers I just don't know. And that's where you would come in and do your research on the company and see if it's something worth putting in a bid at 61 cents, or at at 70 cents or 61 cents, and see if you can pick up GE at that price and see what happens. As you can see, in the past 20 years, investors have found value at 886. And the investors that came in on 886, let me show you. Let me get this magnet out of here. The investors that bought at 886 in 2009 to this high got 350% return on their investment. So if you buy at 61 cents, it took 25 years to reach the previous swing, the high. 25 years. But if you can wait, if you're young enough and you can wait that, the return 9,432%. So this is the analysis for GE. I don't know. I personally don't like this. I mean, it's been on a downtrend for 20 years. Would I want to buy it? No, I think there's better companies out there. But this was a request. This was a request from one of my members. I don't have 25 years to wait to get this. I think there's a lot more stocks and crypto out there that would yield me close to this in a lot less time than 25 years. So personally, I don't think I would be interested in this coin. But for those who are young and who want to take a chance, yeah, yeah, throw a couple of bucks at it, see what happens. All right, guys, I'm gonna post a chart, post a video. I will work on another one today, based off of our request channel for stocks that we have in our Discord. Have a good day, guys.